Hello, this is the market update for February 26. What do we want from investments? This is just a bit of a recap. We want a better chance of positive returns and less risk. And that's what we're talking about there, is the risk-reward ratio. Want this much risk for this much reward, if we can get it. And our number one golden rule, we only buy good value. What's good value? It's when the market has a PE ratio of 15 or less. Why 15? Because that's the long-term average. And P of 15 means average risk, average chance for positive return. Less than 15 means less risk, more potential. And the PE ratio right now is 22, which is well above 15. And this is the share market, the All Ordinaries Index for the last 12 months. It's all been up, but it's been going sideways for about 6 months. The All Ordinaries is now 9,138 and the PE is 21. The target for good value is 6,200. It has a long way to fall to be good value. The US market, the PE ratio is 27.5. Global share markets, 21. And the market temperature now is quite cold, not interested in buying at all. The future, is it all doom and gloom, or are there positive signs? Well, interest rates, this graph shows the average Big Four bank term deposit rates, and it shows interest rates going down in the future, which that's good for the outlook. Australia, the earnings growth, now this means that earnings next year would be about 15% more than the earnings in the past year, so that's a positive sign. And in the US it's 15%, and in the world 10%. So everyone in business is basically projecting that things are going to be better earnings wise in the next 12 months than they were in the last 12 months. Another way we look at how hot a market or how overheated a market is, or expensive a market is looking at the small companies' lag. So the blue line here is large companies, and what tends to happen is people invest there first because they're the less risk, and then that goes up and becomes bad value, and then the small companies follow it. And eventually, when the small companies catch up to the big companies, that's usually the end of a run. Or it's an indicator for an end of a run. It's not a guarantee. And in Australia, the small companies are lagging about 15% behind the large ones, and in the US it's 23%, and in the world 36%. So there's still a bit left in the market, but it's just bad value at the moment. Fear factor, yes, I'm worried, but it's not, it's a 50-50 sort of a thing. There's no need to take any drastic action right now. Well, there may be, but I don't know what it is. Now, we talked about the risk-reward ratio. I've developed a different one called the value-adjusted risk-reward ratio. And that's a ratio of what you could lose, the risk, and what you could gain, the reward, adjusted for the value of the market at the time. And at the moment, this is what it looks like for a conservative portfolio. It's about 6. If the market goes up, as a historical average, it should get about 6.9. If the market goes down, for a historical average, -3. So the difference between these two is this one is more than twice that, and that's acceptable. So that's the potential loss for a conservative portfolio with an average size fall in the market, adjusted for the current value. And the value adjusted reward is a potential return for the year, conservative portfolio based on historical returns and adjusted for current value. So the ratio is 3.3 to 7. Oops, that's wrong. It's 3.3 to 6.9. So the reward is actually 2.1. I didn't update this, sorry. But that's 2.1, not 2.2. So the reward is 2.1 times the risk, which is acceptable. Sorry about that, went the wrong way. So my prediction, markets will go up or down or sideways. I cannot predict what markets will do, as you can tell from that. I can say they're poor value right now and we want good value. So in summary, Australian shares are poor value, US shares are poor value, global shares poor value, and risk reward ratio is 2.1. Which is acceptable for a conservative portfolio. Now here's a general advice warning. This material is for general information only. It's not intended or as specific personal investment advice. And we've taken all care to make sure it's accurate, but there's no guarantees. Before acting on any of this information, get specific investment advice from a professional. Thank you. Have a great day.